The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf.
So it's a positive signal to see that the ETP's offering keeps increasing despite negative market momentum. And in terms of the product structures, there is definitely a shift towards more yield-bearing products.
Hello, you're watching Proactive. I'm joined by Matteo Greco. He is Senior Associate at Fineqia International. Matteo, very good to speak with you. Assets under management for ETPs outpaced the broader crypto market in April. Does that signal genuine investor demand returning, or was this mostly a price recovery?
April was definitely was a good month, especially after tough Q1. For sure, we've noticed that it was mostly price recovery. There wasn't investor inflows as much as there's been an improvement. There's been some green weeks and some demand came in, but obviously after such a tough Q1 and also considering the general market trend in the crypto space in the past few months, paired with generic tensions worldwide, all these factors obviously played a negative trajectory for the crypto market in the short term. That's obviously been reflected partially as well in the crypto ETP. But I would say that overall, the way the whole market held up and the way the crypto ETPs held up this month, but also in general in the past few months is positive. We'll have to wait and see if the demand keeps growing in the next few months, or if we're still in a phase where investors prefer to keep less exposure on the TradFi side for crypto products. But in general, I think it's been positive month for sure.
Matteo, what needs to happen for April's rebound to become a sustained recovery?
I believe now what most of investors are looking at is obviously the whole situation between US and Iran, because we know how much of an impact oil price can have on the overall economy. So far, it's still been mainly speculation, because as much as price have been definitely higher, basically almost double what the oil per barrel was before the war. The impact on the worldwide economy has not been strong yet. I think that's the main point. If things settle and we see the price of oil going down and there's not a shock on the worldwide economy, then demand can increase. Also, central banks can lower interest rates more and decrease the cost of borrowing money. Otherwise, it might. I think this war might play a big role in a negative perspective if things keep remaining difficult on that side. So we'll have to wait and see.
Basket products were the standout performers, up more than 17%. Does that suggest investors are shifting away from pure Bitcoin and Ethereum exposure?
It's purely a market cycle perspective in the past few months, but I would say, to be honest, the past couple of years, the basket products didn't see much of demand compared to Bitcoin, to Ethereum, but also in general to single asset altcoins. The last month was surprisingly extremely good for basket products, and we noticed that there's been a positive impact, but also some genuine demand, because Bitcoin, Ethereum, but also single asset altcoins didn't perform as well. So it's been a nice rebound in terms of demand for basket products. But as per the other thing we've said, I think it's still too early to say that it's an actual trend shift. We'll have to see what happens in the next few weeks and months, and then we'll be able to judge.
Ethereum ETPs down nearly 28% year to date, and they're losing ground relative to the Ethereum price. Is there a structural problem with Ethereum ETP demand?
Ethereum definitely had a weak 2026 as of now, both on the pure crypto price, but also on the TradFi side of things. But it is also true that the ETPs that were holding ETH generated a massive demand in 2025. So I would say it's mainly a capital rotation. It's something that we're used to see on financial markets in general, and it's especially strong on the crypto side. So I don't see a generic problem. Ethereum is still by far the second asset, both on the crypto side of things and on the ETP side of things. And the overall demand since the ETF launch in the US still shows extremely positive numbers. So at the moment, I think it's just a short-term capital rotation and not really a generic problem on the Ethereum side.
Matteo, the number of listed ETPs keeps growing even as assets under management remain well below its peak. Does that product expansion make sense right now? And where does the next wave of innovation come from?
It's a positive signal that we see product offering increasing during a downtrend, mainly because as we all know, when a market has a genuine demand, a structural demand, then in the moment of depression for investors, it's when the offering actually increases, because that's when you can build an actual strong base and make basically revenues and have strong demand when the market trend shifts positive again. So it's a positive signal to see that the ETP's offering keeps increasing despite negative market momentum. And in terms of the product structures, there is definitely a shift towards more yield-bearing products. The latest trend in the past year has been a strong increase in terms of staking products, and we're starting to see options, DeFi, a bunch of different yield-bearing activities linked to these regulated products. And I think that's definitely the way that everyone is headed towards. So I would expect to see more subcategories and more yield-bearing activities embedded in ETPs.
Matteo, thanks as always for your insights. Great speaking with you.
Likewise, it's my pleasure as always.
Matteo Greco, Senior Associate at Fineqia International.
The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf. It is for informational purposes only and does not constitute investment advice, an offer, or a solicitation to buy or sell any securities. Viewers should conduct their own research and consult a qualified financial advisor before making investment decisions. The views expressed are those of the speaker and do not necessarily reflect those of Proactive Group Holdings, trading as Proactive Investors or its affiliates. No responsibility is accepted for any loss arising from reliance on the information presented.